Let us revisit SBB. It's been a while and there's been some news and developments in this company. I will take a closer look today at the outstanding bonds, the interest rates, when it comes to maturity, and we will see a clear pattern in this case. I will also compare this to a key multiple that we see in the financial presentation from SBB so that we can sort of see the trend and where development is going. There's also some short news that I want to comment on. We see a divestment of a residential property here just a few days ago, although this value here is very small, only 221 million Swedish kronor. So if you're American, divide by 10, but compare this to the total balance sheet and it's just a very small amount and not really worth covering. It's much more interesting to look at the outstanding bonds on SBB, and they show this on their corporate website. We can see the term of the bond here on the left of this column, and you can see some information about each of them. So in terms of maturity, we see that some of them run out in 2025, one in 2024, and then there's more long-term debt. In the balance sheet, when you look at it, if maturity is shorter than a year, then it's short-term debt on the balance sheet in Sweden, and if it's longer than a year, it will be long-term debt. So it will be separated, and this relates to the multiple that we will look at later. In terms of interest rate, we can see that the one that was signed 2023 has the highest interest rate on all of the bonds. We can see some here running out 2023, 2024 as well. So they have more bonds with low interest rate right now that will be needed to refinance or repurchased or whatever SBB decides to do. But they also have some here running out later. But the clear trend we see is that older bonds signed in 2020, 2021 have much lower interest rates than the one that we see are more recent. And this could potentially be an issue for continued dividend. If a lot of interest is eating out of the cash flow, well, then we're not going to see any dividend from the company because they need to pay this first. And we can see some of these running out soon with lower interest rate, plus this is the Swedish version of LIBOR, basically. It's called STIBOR. I like that name a lot more. But we can see maturity dates here as well going forward. So this would be refinanced in a lot of cases. I've seen one refinancing deal being done on Oscar Properties where the interest rate went from being low to a lot higher. I've seen a refinance deal being done on Porch Group that I've followed along on, where it went from basically 1% to 7% in interest rate in this case. So as we can see, the whole market is dealing with more expensive capital. This is not something that's unique to SBB. And if we look in the interim report, we see that in terms of equity to debt ratio, it's pretty standard. It tends to be 2/3 debt and 1/3 equity in property companies. Let's see the equity to assets here. All right, we can see that it's just about around there. Historically, it's been at 40% at its highest. Interesting, just slightly higher than the average benchmark. But the interesting metric to look at is interest coverage ratio. And as we can see, going from one quarter here, half, to another, we can see that interest coverage ratio has dropped from having cash on hand being able to cover interest for 5.6 years, basically, so 5.6 times over, excuse me, to only 2.9 times over. And this is still plenty of liquidity, in my opinion, although this ratio has been dropping quickly. And as we see on some of these outstanding bonds, interest rate is low now. What will happen if they're refinanced higher? In my opinion, I believe that banks have no interest in liquidating the company in any form. It's a hassle to run properties. It creates a lot more value if SBB is the one doing it. And in that case, it makes great sense to just make a deal, secure the debt, maybe give it a bit cheaper here, just negotiate what makes sense. And in that case, we could see a period without dividend before the stock comes back roaring. So I think that for SBB, patient investors have potential to be rewarded hugely once these debts have been resolved. We see the worry in the market with interest rates continuing to go up. What could happen if they have to refinance at even higher rates? This is a worry globally on the market right now. And that's when you can make the really great deals if you have the guts and you are also right. So two things that need to happen. And SBB is one of those stocks that could provide a lot of value for shareholders if they manage to ride out the storm, continue paying dividends. Just look at the dividend yield. Remember, it's trailing backwards. So looking at past yield, no guarantee on future payout. Remember, I talked about Petrobras in a past video showing why they had 75% dividend yield, because the dividend yield was very uneven. In this case, for SBB, dividend yield has historically been a lot more even and slightly increasing in the trend as well, with more and more income, more and more properties, and this could now potentially be cut. However, if you're patient, if you buy at these levels, and if you're reinstated, then this is one of the moments where you have the potential to make it absolutely killing. Remember back in 2008, Swedbank was trading at 14 something, and just look at the dividend per share now. Last time I checked, it was 15 something, I think 16 maybe. More dividend than you actually bought the stock for. And that's what happens in these times of turmoils. Some property companies, I'm sure, will fail. Those who survive and thrive in the market, because we're still going to need storage facilities like warehousing. We're still going to need infrastructure for example, hospitals and other critical buildings. I think that, in my opinion, the property sector that will be hardest hit is the ones that have offices with the remote working trend. I think that a lot of value is going to be lost in that one, but that's not going to spill over into, for example, warehouses. As we just consume more and more goods, we're going to need more on that. So if we look at it logically and really think about it, then I don't think that every property company should be measured the same and judged the same. It depends on their property portfolio. All right, that's enough. I'm not going to continue ramble about the opportunity in SBB. We all know that the property sector is really, really hot. It's in turmoil. There's opportunity. There's risk. It's exciting for investors. That's been it. And as always, hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.